Hi, I'm Clay Carter, Chairman of the Investment Committee at Macrovue, and this is Macrovue's monthly market update for the month of April. Now, global equity markets didn't do a lot during April, which is surprising given the amount of good economic news that came out and also some spectacular earnings out of the US and Europe. Australian investors still received positive returns, however, given that the S&P was up about 1.2%, Japan's Nikkei was up about 1.2%, European stocks gained about 0.7%, and Chinese equities about 0.5%. Now, the biggest feature during the month was really the earnings coming out of the US. With over 80% of companies reporting to the end of the month, roughly 78% of companies beat consensus earnings estimates and 77% beat on revenue estimates, and most companies guided up for the next quarter and for the year. Now, this is basically a record amount since FactSet started providing this data for investors. Very strong result. What was driving it? Basically, a strong domestic US economy, a strong international economy, and particularly the tax reform, the tax cuts instituted by the Trump administration. How did Macrovue do during the month? Well, we had two of our views produce some pretty spectacular results. Luxury goods was up 11.89%, and big oil was up 11.67%. Within luxury goods, Louis Vuitton, which is the world's largest luxury goods company, had a very good result. Their organic growth was up 9% year over year across all its divisions, when analysts expected only 6%. And the other luxury goods company in there, Kering, which owns Gucci, saw Gucci sales up 50%. And so that drove not only Kering and Louis Vuitton stocks, but also all the luxury goods in the view. Big oil, as I said, had a good month, obviously on the rise of the oil price. Oil price was up about 7%, but particularly two of the companies in there, Chevron and British Petroleum, had particularly good earnings numbers and are growing their production, which is what investors want.